Now let's go through precious metals, right? What has been going on in gold and silver? Oh my God, right? What a rally. And we just talked about interest rates, and we talked about print and spend, and we talked about debasing of the US dollar. We talked about the US dollar losing value. This is all part of it, man. Uh, it's been coming, and gold is actually has outperformed pretty much everything last couple of years, right? By quite a wide margin, including Bitcoin. And it's an interesting thing. Like, is 5,000 gold too high? A lot of people are talking 10,000 gold. I mean, look, if we keep printing and spending, let's say call gold an inflation hedge. Yeah, I mean, you have to protect yourself, by the way, folks, somehow. Don't listen to the government. Government's gaslighting you. Government saying, oh, inflation is 2.5%. My ass is 2.5%. It's not 2.5%. You're losing buying power to the tune of 6 or 7% per year. So you have to make up for that. So if you're investing just in index, 10, 11%, okay, you're making headway against that. But if you were investing in gold, if you invested in Bitcoin, a while ago, not the last couple of years, obviously, but we're talking about precious metals. If you invest in gold and silver over the last through 2-3 years, you've done amazing, right? You not only kept pace, you went way ahead. But that's why you have to, instead of slave harder for a W-2 or a paycheck, you have to save in our hard asset. That's why I believe investing and long-term investing is a key to financial freedom, because look, nobody's coming to save you. Nobody's going to save you unless you have rich parents you can count on, that you have a trust account or some sort. Nobody's coming to save you. So learn this, understand this, and make sure you just listen to the people who you trust, as opposed to some fool on X. I keep calling them fool on X because they're all fools. And, because they talk their book. And, I mean, to me, it's like, understand risk, but then also you have to protect yourself against inflation. The inflation is not 2.5%. We all know it's not. We all go buy stuff. Okay. We know what's going on. We know what's going on to auto insurance rates. We know what's going on to utility power and water bills. We know what's going on, right? In all this, schooling, we know what's going on, healthcare. Government kind of says it's 2.5% because their basket is made up of some ridiculous stuff that just only collects that data. I'm like, I'm paying a lot more than 2.5% for everything that I'm buying over the last, I don't know, 5 years, 6 years, 7 years, right? So, and it's going to keep doing this. I mean, because on the other hand, the inflation, they say low, but then they keep printing and spending. Well, that's the reason for inflation, because the true definition of inflation is too many dollars chasing too few goods. Well, we have too many dollars because we keep creating synthetic dollars out of thin air by adding zeros into the ledger and then just putting it into the system. Look at the M2 growth, global M2 growth. That's money supply. Look at the US M2 growth. It's been going from lower left to the upper right nonstop since 2008, actually. Well, that means you're losing value. You're losing your buying power constantly. So when you're losing buying power, what do you have to do? You have to protect yourself, because I don't think your paycheck is going up 6-7% a year. I don't believe people's paychecks have gone up 6-7% a year the last 5, 6, 7 years. Well, now you have to go invest, right? If you don't invest, you're going to be left behind. And that's the reason, by the way, the top 10% own 87% of the assets in this country, because they invest correctly. They have seen this, they understood what's going on, and they protect themselves, right? How do you do that? Precious metals, stocks, real estate. That's the only way. You have to protect yourself. And we know what's going on with all those markets. So let's talk a little bit about gold. Let's talk a little bit about silver. And I mean, they have had a parabolic move, right? Most parabolic moves end badly, which it did, by the way. So let me answer these couple of quick questions and then we'll go on. Oh, you're welcome. Please join if you care to join. We can have a discussion about anything you want to have. Is gold and silver overvalued still, even though the dollar is losing? Yeah. No, it's not. I don't think it is. I don't think it is. Because I don't think it is. Look, the price is the price. You can't argue with the price of these things, right? Silver hitting 120, gold hitting 5,500, and yeah, a little bit of a pullback, but gold's still at 4,800 or 5,000, right? I mean, those pullbacks happen when things go parabolic, and then they settle down, they go sideways for a few months, and then they take the next leg up. And I don't think it is, because gold and silver will sell off if we have proper fiscal policy, meaning we don't keep printing anymore. When M2 starts coming down, when money supply comes down. I don't see that happening with any administration. I don't see that happening with whoever's in the White House. I don't see that happening with anybody, whoever's in Washington loves spending money they don't have. So that's going to continue. I don't think it's over. I really don't think it's over. I mean, you have to have a longer perspective. Traders look at gold selling off from 5,500 to 4,500 overnight. Literally, that's what happened. And people go, "Oh, it's over." I'm like, "What are you guys talking about?" Right? I mean, you have to understand the bigger picture behind why these things are happening. So let's take a look. Let's take a look at no, this one. Let's take a look at gold and silver. Hopefully, you guys can see this. Actually, let's just leave the monthly on. All-time gold. This is all-time gold. Does that look like anything has changed? Yeah, it had sell-offs, obviously, because when rates went higher or whatever happened. But then the general, actually, if you look at this chart, this is gold going back to 2004, about 21 years. This is all my charts show going back, but obviously gold has a much longer history. This is a copy of the money supply chart, literally. Okay, all of you can Google that. Just go to look at M2 growth, global M2 and US M2, and this looks pretty identical to this chart. And if you look at silver, same thing. There you go. Although silver has gone absolutely parabolic at some point, and over long periods of time, this is your protection. This is your inflation hedge, right? I mean, I'm not saying you should go put all your eggs in one basket. You should definitely have some exposure to gold and silver. You have to, because that's how you're going to just kind of combat inflation that the government says doesn't exist. So this is gold and silver. So that's going back to 2004, 2005. If you look at shorter term stuff, because I look at 1 year, 1 day, yeah, it got a little out of hand when SLV, which is iShares Silver Trust ETF, went to 109. So 109, I think, equals about 120 in physical silver. And then it literally collapsed to 70, and now it's just kind of going sideways. We'll see where it's going to end up. But I think my point in all this is, over periods of time, it's higher, and it's going to be that way because we're not changing anything. And gold and silver, I don't think, are high. And then, within that, you don't have to invest in physical gold and silver. Obviously, you can do it through GLD and SLV, which is the ETFs of gold and silver, which is one way. But we can also look into investing into obviously silver stocks or gold stocks, and the index for that is NUGT. That's the daily gold miners 2x ETF. Actually, look what that has done. Right, that has gone from the lower left to the upper right. While all this is happening, a lot of people are talking about Palantir and Hood. I'm like, this is the opportunity cost that I'm talking about. Right? So to me, it's like, no, you need to just change your tune a little bit, right? There's many other ways to invest and benefit from what's going on, as opposed to just, have a horse with blinders on and just see Palantir or Hood or SoFi or whatever, or Mag 7, right? Why do I need to be in Mag 7 when gold is doing this? So my point in all of this is there is a time and space for everything, and then hopefully you guys will understand how these things are correlated, right? What happens to interest rates, what happens to the US dollar, what happens to precious metals. Why do they do what they do? Yes, the sell-offs do come and then wipe people out, and because they're just overly exuberant on the upside. Okay, so gold is going to go sideways. Gold had a correction about last September, October. Yeah, it had a pretty big correction, actually. It had, this is the GLD, not the gold price, but you can correlate to the gold price, spot gold price. It went from 190. This is NUGT, by the way. It went from 190 to 120. That's 70 points. That's like a pretty big sell-off, 40%. Well, it's doing the same thing now. It went from 317 down to about 200. Yeah, if you got caught on the wrong side of that, yeah, it's going to hurt. But gold over long periods of time, I think, is just, absorb what's going on now, go sideways, and then take the next leg up. Because I don't see a resolution to broken fiscal policy, broken monetary policy in this country. And they're going to keep pumping, and they're going to keep spending. They're going to keep printing. And this is your hedge. I mean, a lot of people don't like Peter Schiff when he says gold, gold, gold. Well, he's been saying gold, gold, gold for 10 years, 15 years, as far as I remember, on CNBC and everywhere else. I mean, he's being right? So to me, you got to protect yourself. And this is one way to do so. Because it's really, really a shame that people are just stuck in a couple of different stocks that they know of or they talk about, but nobody talks about this. And I'm like, why not? Right? Diversify a little bit.